Today, we are going to do an update on Bitcoin. What is happening? What's likely to happen next? Let's take the key pieces of information into account: momentum, technicals, pattern, price, and then I'm going to show you how you can see what's likely to occur next with high probability. So if you like today's video, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jagir, the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I've been focused on really trading currencies, Forex, but now exclusively focused on crypto. So let's dive straight in. So here's just a quick update on our last YouTube video, which was top 5 Monday. So I'm aiming to do like top 5 coins in the, in terms of coin market cap ranking. And obviously number 1 was Bitcoin. And this is what we said. What we said with Bitcoin was, look, the weekly momentum, which we're going to dive into today, is now up. So now the bias, the edge, the probability in a non-emotional, objective manner is sideways to up. And we have to take that into account. For that main reason, we said we're probably going to get higher highs, breaking this swing high over here, and normally it will unfold in a 5-wave structure. But we also want to take into account that the daily momentum is pointing, well, it's overbought, which means soon it's going to be pointing down. So next 1 to 3 days, expect down. And then on the next bullish reversal is where we probably want to anticipate potential long positions for you short-term traders and just for overall feel of the market. So let's jump into a live Bitcoin chart. Let me just make sure I got this. Bang. There we go. So yeah, the main thing we were saying in the last few weeks, I was personally anticipating a bigger pullback in Bitcoin, anticipating that we were likely, and again, the words using is likely, to see a potential retest of this low and hitting the 32,000 mark. Is this an A, B, C of a wave 2? Or would we see lower lows? Now, at the time when I was anticipating lower lows, the weekly momentum. So if I just dive into this top left-hand corner, this is the weekly chart, right? But this is the main thing I want to pay attention to weekly. All that time when we were anticipating lower lows, the weekly momentum was pointing down. So that gave us, that was the edge. That was the high probable outcome. But now that we've had this bullish reversal where the blue line has crossed over the red, now it says, look, we should be looking for long positions or for more upward patterns. And that's what we're going to dive into today. So let's just zoom in here. So it looks like, as the price data unfolds, that this low is going to hold, and it's more and more likely that this is going to be a wave 2 low. Why? Is because we've now exceeded this 48,300 closing price. And that was the key number that we were saying a couple of weeks ago, even a few days back. If we break this, we need to change our opinion of the market. But we actually changed our opinion down here because the weekly momentum. Yeah, hopefully that's making sense. Now, what I wanted to cover today, to kind of give you a real flavor, because these patterns unfold time and time again. Hopefully you watched my XRP video the other day, because XRP is just following textbook technical analysis. Here, it looks like a nice wave 1. Let me just draw it like this. A nice wave 1, a wave A, B, C of a wave 2. Now we've had an overextended wave 3. That's what we're going to look at today. In fact, let me redraw this. Let me show you this, because this is powerful stuff. If we measure this low to this high, what we're calling a wave 1, and project it from this wave 2 low, the most common wave 3 price targets is 1.618, but then you often get an overextension of 2.618. So we always have these two price targets. And we can see we found some resistance at this zone, but then it just smashed through towards this zone. So we're likely to get the wave 3 high around this zone over here for Bitcoin. Then what we're likely to see, we'll dive into this in a second in a bit more depth, on an hourly chart, we'll see some type of wave 4 correction and then another wave to the upside. Now, a lot of you have been asking me, especially in my private Telegram group, what's the likely time kind of analysis as well. But this is what I see happening: 1, 2, 3, 4, 5 as a 5-wave structure, and then we should see some type of correction, and then a continuation again on. So the overall trend is now up. That's what I'm seeing. So what I want to do today is just dive into. Let's just get rid of this 1.618 now, because we've gone to the 2.618. So this one's no longer relevant. What we want to look at on a lower degree time frame, which is going to be the hourly chart, is this part of the market. Does this break down into any pattern where we can kind of deduce a more accurate high probability end of wave 3, which is this zone up here? I'm going to draw it like this zone up here. before we get a potential wave 4 correction, and then we can anticipate the low of this before we get a wave 5. And these patterns unfold in all markets and all time frames. They just happen to apply incredibly well to crypto. And we always want to go with the edge when we take into momentum into account, which is like the stochastics RSI, these blue and red lines that we're looking at the bottom of the chart, price in terms of Fibonacci, price ratios, time ratios, and Elliott wave patterns. Because again, these patterns tend to unfold. And if you've been watching my content, you'll see 50, 60% of the times they tend to unfold and you can peg the highs and the lows quite accurately. But not just for the sake of pegging them. You want to be making your business decisions around this also. So I'm going to now jump into this bottom right-hand corner, which is the hourly chart. And I've drawn this part. So this is the exact same data that we're looking at on a daily, where we said it looks like a wave 1. But because on an hourly chart, we see the intricate waves in between, which gives us more valuable information. A, B, C of a wave 2. And now we've got this, what looks like a wave 3 unfolding, and we're going to pay special attention to this structure and what this looks like. So I'm just going to get rid of this wave here, because I realized a lot of people are doing, you probably being one of them, doing short-term trading, in and out of the market in a single day. Not necessarily what I would personally be doing or recommend, but if you are, this can be very, very helpful. But also this applies to longer, bigger degree time frames. But what I'm seeing here is a nice wave 1, a wave 2, what now looks like a clear wave 3, an A, B, C of a wave 4. And then we want to look at, is this unfolding in a certain way? And of a wave 3, a wave 5, let's keep this as a sub-micro, of a wave 3, right? That's what we want to look at, right? Can we peg this a bit better? What I'm noticing here is I'm going to zoom in. This is a bit more advanced. If you haven't already, take my free Elliott Wave and Fibonacci masterclass, because I cover these, especially the double degree of counts, like 2 degrees of counts. We are going to be doing, it's almost 3 degrees of counts, which if you're not used to, can be a bit confusing. But if you take my free Elliott Wave masterclass, I've just broken it down into layman's terms. This part here, we want to look at, is this giving us any very valuable information? Well, it is, because if we look at it, I'm going to zoom in here just to make it ultra clear, because you'll see it once I zoom in. Once I zoom in, you should probably also see this as well. Do you see any pattern unfolding when we're talking about 1, 2, 3, 4, 5s? Because impulsive waves tend to unfold in 5-wave sequences. Is the most common, typical, psychological buying and selling pattern. We've got this 1, 2, well, it looks like a 3, well, it looks like a 4 unfolding, and then we should get one little spike up and closing around this kind of area. So what we can do here, from a pattern perspective, is draw this out. Just go 1, we say 2, 3, 4, 5. So now we've got a wave 5 of a 5. Again, I'm just going to change the color on this one. Let me just change the color to orange so it just stands out a bit. But what this allows us to do, we're not just doing it for the sake of doing it. What we want to do now is use Fibonacci price ratios, because these dynamically measure the psychology of buying and selling. And there's 2 key ratios, but one in particular that I'm going to do, but I'm going to do it on 2 degrees of counts. So we can do it on this first degree of count, this wave 1 to 5, and then we can do it on the second degree of count, which is this wave 1 to 5, right? And then we should get a cluster, and we're looking for a confluence of events where we've got multiple pieces of information telling us the same thing, and that's what gives it high probability. So I like to keep things as objective as I can. So we're going to measure this low, this wave 1 low, to this wave 3 high, projected from this wave 4, and the typical wave 5, there's actually 3 ratios, but 2 are more common, which is 62% and 100%. And you'll see 100% is here. So we've got these 2 zones, and we'll see you've got this cluster on the larger degree time frame as well of the wave 3 that we had from previous. So that's important and relevant information. And then we can just do the exact same thing, but from this wave 1 to this wave 5 low. Now this wave 4 hasn't been confirmed yet, but we can still do the ratios, and we've got 2 clusters, and we will put into account the 38.2% retracement. So this tells us this is a very high probability resistance zone, and we should find some resistance here. And we can wrap this up with, let's just do it like this. 1, 2. Yeah, we can do it like this. Often wave 5s mimic wave 1s. And if this is a wave 1, this price movement here to here is often mimicked from down here. And you can see we're nowhere near that high. And the typical maximum of a wave 1 tends to be 1.618, which has been exceeded already. Right? And then we can do the same again for this wave 1 over here. This wave 4 hasn't been confirmed, but we're just going to assume here, bang, and then we'll do 100% on 1.618. Now, I know these just look like lines, but you'll notice there's a cluster. So now there's like 3 narrow zones, and we can keep it as a broad zone. It depends on what you're doing with this information. We got this zone here. If it surpasses it, you'll probably get to this zone here. This is very intricate information, and if it surpasses that, you'll probably max out at this zone here. So now if I jump back into the daily chart, let's just see if that information is here as well. It is. Perfect. Let's get rid of this one. This one's not that valuable to us. We've got these 3 very narrow price zones. So what we're looking for is a few things. One, if I just zoom in like this, is the blue line on the daily on this here. Let me just double check. Is, yeah, the blue is below the red. So we've got a bearish reversal happened already, which is important information. It's happened in here. So it means the upside should be very limited. So we're probably going to get a last little spike up into this range, and then a continuation to the downside for 3 or 4 days. So I'm going to finish up on, let's just assume for a second that this is going to hold for a wave 5. Which should we expect a wave 4 to unfold? Well, what we should expect is wave 4s are typically 38.2% to 50% of wave 3s. So what does that mean in English? It means in English, Bitcoin should pull back to at least 48,623 if this is the high. How long should it take? And by the way, if you haven't already, again, seriously, take my free Elliott Wave and Fibonacci masterclass. It's in the description below. I just cover this in a bit more detail, so it doesn't feel like it's a different language. You just kind of get some of the concept. This over here is a simple ABC. So what we can expect more often than not is the time taken. Let me draw as an arrow actually. The time taken for this potential wave, this wave 2, the wave 4 should take longer. So how that looks is we can do this. We can say if it does end up being here, we can say with some confidence that we should expect, if this ends up being a wave 5 high, and especially if this low over here gets taken out, this swing low over here gets taken out once the movement to the upside occurs, we should anticipate the correction going at least to around the 12th of October before we see the next spike, and it will more than likely coincide with a momentum bullish reversal, as in it will go sideways to down. It'll probably coincide something like this. We get a bullish reversal where the blue line crosses over the red. Then the daily momentum will be pointing up, and the weekly momentum is already pointing up. So then you have 2 time frames saying the momentum is up. That increases the probability of the market moving up. That's really, really important. Then we've got multiple Fibonacci price and pattern. We've got Elliott wave patterns and Fibonacci price telling us the same thing. And we've also used a bit of time analysis to get a bit of indication on the minimum time for a wave 4 correction after this last little spike, if it occurs this way, should be by the 12th of October. And we should anticipate if it reaches this high over here, around 48,600 and below. What we shouldn't see, this is important, because it's like, what would invalidate this analysis? It'll be if the price goes below this point. So we shouldn't see price go below, I can give you the exact date or the closing price of 44,858, right? We shouldn't see price go below that. So these are just the high probability zones. So what I'm going to draw here is I'll draw it like this, and it'll be like that. There you have it. You got the Bitcoin update. It's us, what I'm aiming to do. So I'm bullish on crypto, bullish on blockchain, but I'm objective, meaning we are taking momentum into account, pattern into account, price into account, and time. And what objective information do we have where we can make non-emotional decisions? And that's what we're looking at over here. So yeah, up sideways to up is looking healthy. It's looking healthy. So let me know, what do you think? Are you thinking up? Yes. Are you thinking no, it's actually still going to retest? Because I know there's a lot of still conflict, but I just go with the edge, and that's important to know. So do take my Fibonacci and Elliott Wave Masterclass. Well, I love your feedback as well, because I'm aiming to make it easier to read the markets, and it just doesn't apply to Bitcoin. It applies to top 10, top 20 coins, but it also even applies to the younger coins, because where there's multiple participants with reasonable volume, you'll see that the price tends to follow these patterns. So I'm going to read you a quote. I think it's really, really relevant, because if you've been trading Bitcoin and you're long, you might get a bit of a 30, 40% pullback on a shorter time frame with that swing, the last swing, to 48,000, 48,500 before we see us doing a really clean break past the 50,000 again. So this one I am going to read is rule number 1, never lose money. Rule number 2, never forget rule number 1. Do you know who that is? You heard it before. It's Warren Buffett. It's a good one. It's a good one. So now we can get ready, I think, for the bullish behavior of the whole crypto markets. And we're looking for, ideally, wave 4 lows or wave 2 lows to really ride a wave 3 or a wave 5, the impulsive wave. And in crypto land, call it crypto land, you often find that wave 5s tend to be overextended, mainly because of panic buying, FOMO. The emotions tend to be quite high in the crypto space. So like, subscribe, hit the bell notification, and I will see you very soon.